Hi everyone, and welcome to Aspas's top off-plan recommendations in the current market. I'm Jake, head of the off-plan team here at Aspas, and today I'm joined by Jordan, one of our top performers. Jordan, how are we doing?
I'm doing good. Thanks for having me. Always excited to talk about off-plan and real estate, especially with yourself. So looking forward to it.
Let's get started. So before we go over our top recommendations in the current market, I think it's important to understand the landscape of what's going on. So first, if we look at the rental market, we can see that the volume of rental transactions is actually down in the communities that we represent at Aspas, despite rental prices increasing. Why is that? It's because the opportunity cost of owning your own property, like for like properties, has increased to the point where interest rates have made it more affordable for tenants to become end users in the secondary market. From that, we are seeing end users planning their homes for a lot longer term thinking. So they're buying properties around the schools, around where they work, and they're not thinking to move for the next 5, 10, 15 years, which is good signs of the market stabilizing and maturing in key areas. Within that, we are seeing that secondary market transaction volume is down in most communities despite prices continuing to rise. Again, for those reasons that end users are thinking more long term. That effect is overspilling into the off-plan market because a lot of end users are being priced out of key communities, and we need these up and coming projects to be the next wave of what Dubai has to offer.
Further to that, I think what we're seeing a lot more of is end users in these legacy communities, such as the Springs, Arabian Ranches, the Meadows, etc. They're actually finding a new product offering from the off-plan market where technology is advancing and the master developers are becoming a bit more smart with their master plan layouts and the amenities they're putting in this community. We're actually seeing a trend of end users buying off-plan for themselves to upsize and move into a newer community with arguably better amenities. On top of that, what is really driving the growth and investment into this market? Of course, the most obvious answer is the tax laws in Dubai, the opportunity to have income-free tax, corporation tax at just 9%. It's such an investor-friendly market. To do a transaction in Dubai is far simpler, especially on the real estate side of things compared to any other real estate market. And more importantly, the returns that investors are seeing are outpacing any of the other global real estate markets. Compare it to London, Hong Kong, Singapore, New York. The rental yields in these cities compared to Dubai are much lower. And as well, on a capital appreciation perspective, Dubai is appreciating at a rate of 15 to 20% per annum. Of course, it varies on the product, the location, etc. But on average, that is far outpacing the rate of growth in these other major cities.
And how is that happening? Why is that happening? Dubai and the UAE has positioned itself in an incredibly strong position post-COVID, whilst the rest of the world is kind of seeing this post-COVID turmoil through economic instability and political instability as well. If we take the UK, for example, at Aspas, UK clients have always been in our top 10 mix. But certainly this year, with recent changes to tax laws and the upcoming budget, we are seeing a phenomenal amount of residents from the UK restructuring their entire portfolios and businesses and moving across to Dubai. And that's just one location, one nationality of many, many people from around the world that are choosing Dubai and the UAE as their next destination and their permanent home.
What's great about the UAE as well and why it's attracting so much investment is the government. They've got a vision and they're sticking to that. You look at the 2040 Urban Master Plan, the D33 Economic Agenda, the budget, how much billions of dollars the government are putting into this economy, into this city to make it a desirable place to live. The streets are safe. When they say something, they do it. The amount of infrastructure improvements we're seeing on a month-by-month basis is incredible. The health and school and education is world class as well. So not only is it an amazing place to invest, it's an amazing place to live, which is so important for the longevity of the market. And we're now seeing people move here and put their roots here and put their kids through school and grow up here.
And this is why smart investors are picking projects that are very closely tied to where the government is spending across Dubai, because they lead by example and real estate follows that trend as well. We're now going to take you through our top recommendations for each budget class. First of all, we are seeing the highest transaction volume in the 0 to 2 million category. So for your first time investor, your 1 bedrooms, your 2 bedrooms, your studio as well. Jordan, what's your first pick?
For me, if you're an investor with that budget and it's your first investment into Dubai, especially as a foreign investor, of course, investing with the right developer is absolutely critical. You want to be someone that's got a great track record and you're in safe hands. So for me, my top pick would be with Ellington and their project in Windsor House. Why? Ellington's track record is phenomenal. They're amazingly popular with Europeans because their quality and contemporary style is really beautiful. Their quality in the market is one of the best. Their payment plans are a lot easier than some of the other major developers, which again helps you manage cash flow. And one bedrooms in this Windsor House project are starting from 1.2 million dirhams. The location, it's in Dubai South. This is a really promising area that the government is putting a ton of money into, improving infrastructure, creating the brand new Al Maktoum Airport, which will be the largest airport in the world, including multiple other districts, which will generate jobs and have a spillover effect to this development, which will see not only great rental returns, but capital appreciation in the future.
Yeah, and I think in terms of Ellington, their track record does speak for itself. 94% occupancy across all their projects. And I think they're always one of the first developers to be in a new area as well. And I think this project in particular in Dubai South is for that investor that is willing to hold in the long run and see the appreciation come in the long run. Because if we compare to Dubai Hills, for example, the same product is being sold for double in some cases, or over 1 to 1.5 million more. The two bedrooms in this project are selling for around 1.7, 1.8 million. We have just sold the same layout in Ellington House, Dubai Hills, for 4.2 million at a spas. So there is a significant capital appreciation story whilst this area continues to develop.
What impresses me the most about Ellington is if you look at who's behind it. The CEO, Robert Booth, he's ex-Emaar, the number one developer in Dubai. And their first project, one of their first projects they did was in JVC, Belgravia, and the other projects they did there. JVC is an area which has tons of apartments coming up. Yet, due to Ellington's quality, their design, it is the number one project for capital appreciation and rental returns out of any other building in that area. And they're taking that quality and putting it in strategic locations across Dubai.
And I think secondly, if we compare to Windsor House, some investors might not have the risk appetite or might want something that's more proven. And I think Amar's recent project release in Dubai Hills, an established master community with apartments, townhouses and villas and luxury mansions as well, is a great place to be looking because arguably Dubai Hills is the most centrally located community in all of Dubai with access to downtown, access to Abu Dhabi side as well. In particular, Rose Hill has been a standout project for us because one bedrooms there were starting from 1.6 million. So you are riding the wave of a community that is already highly in demand in the secondary market. It's one of the highest transacting communities in the secondary market as well. And this value proposition compared to what's in the secondary market does really stand out as well. And Amar in particular, as we will touch on with other projects in this presentation, they have the strongest track record of delivering time and time again. They are the benchmark for developers. They are the number one master community developer because they create a brand behind these communities. They create a legacy behind these communities. And that's exemplified by the Dubai Hills Park, by the Dubai Hills Mall as well, all on your doorstep, offering that lifestyle as well.
On top of that, they're government backed. And anyone who is, again, looking for a safe investment, you're not so sure on the Dubai real estate market, you want to test it out. You try it at a lower ticket price with the safest developer that have government support. You have a great experience, and then that's when you can expand your portfolio.
Every Amar unit has that track record and history of renting out at strong returns and having that capital appreciation story as well. So the next segment of 2 to 5 million is where we'll be focusing on next. And I want to flag as well that all of these projects are spread across a payment plan with varying degrees of down payments that are required, on average of 10 to 20% with the additional 4% DOD, and spread across sometimes a 2, 3 or 4 year payment plan. So it's important when considering investment, not just to think what is your total budget or what do you have now, but what is your annual cash flow commitments that you can stick to? Will you be able to afford the handover payment as well? What does the first year of cash flow commitments look like for you? So within this segment, Jordan, I know you're very fond of Expo City. It's somewhere you've sold as well, and it's somewhere we think is the next kind of capital of business in Dubai, right?
Yeah, I absolutely love the vision for Expo City. Again, a huge pillar of the government's 2040 economic plan and the urban master plan, I should say. The future hub for business growth. Already Emirates are headquartering there, Siemens, NG Power, multiple big corporations will have offices in this community. It's a sustainability driven community. The master plan looks absolutely phenomenal. Metro already exists there and it's very strategically located. On top of the fact the government is pouring literal billions of dollars to improve this development. Further to that, we're seeing the World Trade Center move its activities from downtown to Expo in 2026, which has an annual footfall of 2.5 million visitors per year. So this is a real huge opportunity for investors to get in to this area now, whilst there's very limited supply and the demand is clear. In terms of the products that are available in Expo City, Expo is another government-backed development. Again, you're in very safe hands. There are two-bedroom duplexes from 3.5 million dirhams on a 50-50 payment plan. Why is 50-50 so good? You pay 50% across the construction cycle and then 50% when you get the keys. The great thing is that 50% is mortgageable. So you don't actually need all of that in cash and you can put that on the mortgage.
And I think one element that stands out to me about Expo City, and it's from one of your clients as well, is there's definitely a short-term play to be had in Expo City because it has the largest exhibition center in the Middle East. It's one metro stop away from the largest airport in the world. With the amount of huge corporations that are moving their headquarters there, we will see significant amounts of people staying there in the short-term market as well. And right now there is a significant undersupply of hotel and short-term possibilities to stay there. So I think it is a fantastic option and great value for money as well. And it will continue that legacy of Expo 2020, which will be a key pillar of Dubai.
Expo is for the investor who wants a good rental return and long-term capital appreciation. If that's you, Expo makes perfect sense. The location's great, just 15 minutes away from Dubai Marina, which is already an established commercial zone. That's where we are sat recording right now, on top of the 2.5 million annual footfall for the World Trade Center, and as Jake mentioned, the largest exhibition center.
So moving swiftly on, we focus there on three key apartment recommendations. And I think it's essential when analyzing apartments to be very, very picky. It has to be linked to that economic story of what's going on in Dubai from the government side of things as well, because overall, with the larger landscape, apartments make up about 90 to 95% of the supply coming to market upon handover. So the 5 to 10% that makes up the rest of that market is the townhouse and villa segment. It is heavily undersupplied. It is the most in-demand segment in the rental market, the secondary market, and off-plan as well. And one of our top recommendations between this 2 to 5 million price range is Vindira in the Valley by Amar. Now, starting prices there are 3.1 million for a 3-bedroom plus maid's room and around 4 to 4.1 million for a 4-bed plus maid's room as well. With Amar, again, they have that legacy of being the #1 master community developer, but also they are ahead of the curve in terms of what is to come next. With their first gated villa and townhouse community, Emirates Living, where I used to specialize in the secondary market, when that was first released, it was on the other side of Dubai where everyone was based and nobody believed it would become the most prime located community in Dubai. Similar kind of feedback we see from some of our clients is that the valley is too far out. It's not for them because it's not near anything. It's too far away from where the key parts of Dubai is. And I think if you take a step back, if we compare Emirates Living, that is 25 minutes away from downtown, arguably the heart of Dubai. The valley is actually the same distance, but with the valley, I would probably describe it as one of Dubai's first true suburb locations. And I think that is harsh to call it that because it's still 25 minutes away from downtown by car, which in other major cities around the world, you can't actually get that proximity for something that close. But the value proposition is undeniable. If we compare to the Springs in Emirates Living by Amar, similar sized townhouses are transacting at 5.5 to 7.5 million. Again, as Jordan said, Amar has evolved. They are producing a better product for an end user that wants more viable space, a more modern space as well. But for me, the amenities truly do stand out. It's offering that next stage of lifestyle. And I think lifestyle is becoming the luxury that end users are looking for because you've got a 2.5 million square foot park that you can walk around. You have a huge swimmable crystal lagoon. You have a sports village on top of the regular market amenities of a gym, a pool, a school, a mall. Everything is on your doorstep. So for me, if you're living in that community, you don't actually need to leave. And again, where Amar is so well positioned in the market, I believe this is one of the first communities of many that will be coming up in that area, and they will be the best ones positioned to get the best long-term appreciation.
I completely agree. I think the Valley is an absolutely incredible master plan by Amar. I think it will be one of the best end user communities in Dubai. And from an investment standpoint, if it's good for the end user, it's amazing for the investor because that's who you'll be selling to. In my opinion, if you're looking at the Valley, this is the best vehicle for capital appreciation at that price point in the market. Why? Because it touches on the basic fundamentals of economics, an undersupplied product that's in huge demand. You look at the population growth Dubai is experiencing, we've just hit 4 million in population with a plan to double by 2032. These families, they need townhouses in an Amar community. The value for money is undeniable when you compare it to Emar's legacy communities, and just 25 to 30 minutes away from downtown, a huge commercial hub, and the IFC, the financial center of Dubai.
Awesome. So I think going into the segment that is above 5 million, we have some standout projects. And again, I think with any project that you're considering, it's important to understand what your investment goals are and what your investment strategy is as well. And that's why working with an advisor that we'll touch on later is key to guide you in a market where there are a lot of developers, there are a lot of projects. And it's important that you work with someone who has done your due diligence on these projects and why they make sense for your fit. Jordan, another standout Amar project is Grand Polo. They've had a number of launches this year. Chevalier Estate 2 is one that has just popped up. Why is this a standout project to you?
They are the number one developer and they are the safest. And again, why is Chevalier Estate 2 such a top pick from ourselves? Because it's not only touching on the undersupply of townhouses and villas, it's on the villa side. These are independent villas, which is touching on the most undersupplied segment of the market, villas, which account for maybe only 1 or 2% of construction over the next 4 years. Again, villas will be everyone's primary choice for families, the bigger space and that privacy. In an Emaar community, Grand Polo, again, a brand new concept master plan with polo fields. It will be the largest equestrian center in the UAE and Middle East, and the third largest equestrian center in the world. Beautifully master planned, open green spaces with parks, a stunning clubhouse, and the villas there are starting from 8 million dirhams, 4 and 5 bedrooms with handover due for Q3 2029.
With Grand Polo, the value proposition is undeniable because with this launch, we saw prices around 2,000, 2,100 dirhams per square foot. And when we compare that to the likes of Sidra, Dubai Hills in the secondary market, upgraded Sidra villas are transacting from 4,000 to 5,000 dirhams per square feet. If we look at JGE, for example, upgraded, fully renovated villas are transacting around 5,000 dirhams per square foot. So again, in an undersupplied segment of the market, villas, this value proposition for me is undeniable, and we will see this capital appreciation story, and we will see another Amal community that raises the benchmark of what amenities truly define the lifestyle that end users are looking for.
Absolutely, and the market's reaction is a sellout every time. Grand Polo Phase 1 was launched earlier this year, sold out. Grand Polo Phase 2 launched in summer, sold out, and that is the case for all these villa and townhouse launches. The absorption rate from the market is rapid, so anyone that's looking at this will be considered lucky to get a unit. The location is very strategic, in touch with the future growth of Dubai and Dubai South, yet in touching distance to mainland and downtown, the IFC, etc.
And last but not least, it's Palm Jebel Ali. And I think it's almost like we have a time machine to go back and see the evolution of Palm Jumeirah, the evolution of Dubai Marina, Emirates Living, Jumeirah Islands, Jumeirah Park, because not only Palm Jebel Ali, but all the surrounding infrastructure and the communities that are to come are what's coming next in this location that is tied to that Dubai South growth story. We are seeing one of the final releases of Palm Jebel Ali villas coming up very soon with starting prices from 25 million. Again, if we look at the success of Palm Jumeirah, that's transacting around 9,000 dirhams per square foot for the luxury side of things. This is on offer in Palm Jebel Ali for 2,500 dirhams per square foot, a significant capital appreciation growth story, a significant end user story that is expanding the most in-demand waterfront community in the world where supply is extremely restricted. So not only should you be looking at the villa side of things, but also what is to come in and around these communities as well, with the apartment launches, with the hotel launches, with the marina launch, with the further villa and townhouse communities that will replicate the success of where we are sitting now in Dubai Marina and everything around it. Stay tuned.
No one can deny that the Palm Jumeirah has become one of the most prestigious communities in the world and some of the most valuable real estate out there. Palm Jebel Ali is that on a larger scale by the same developer in the modern era. On top of that, the beach access in Dubai is a huge factor. Being in Dubai, the weather's amazing. People like to be close to the water. The coastline in the Dubai and UAE is finite. And again, it's playing to that economic fundamentals from an investment perspective. being somewhere where there's only limited land will increase the value of your property. So that's becoming an ever more scarce resource, being close to the beach and being on the beachfront. So an opportunity to own a luxury villa on the Palm Jebel Ali in the waterfront is an exceptional opportunity at this price per square foot.
Building on from the success of Palm Jumeirah, Nikhil has recognized some of the faults of Palm Jumeirah and where it can be improved as well. And this is tied into the overall master plan design and thinking ahead of what is to come next. This is one of the global mega projects that will see a lot of attention worldwide.
Why work with a SPAS? Why work with myself or Jake or any of the team here? What Jake touched on earlier is so critical. If you're someone that's looking at the apartment projects in the market, for example, there is so many options now for buyers out there. There's almost a launch per day. It's impossible for any buyer, even if it's their full-time job, to be fully informed on the market and understand what suits their requirements best. Our jobs is that. This is what we do day in, day out, to be an expert on the market and to listen to everyone's requirements as if we were a doctor ourselves. There are so many projects in the apartment space. You have to be incredibly strategic and smart about, is the location good? Are the amenities good? Is the value proposition make sense? Do the comparables? Is there clear appreciation upside? What are the rental returns in the area? This is data that we have access to and that we can study for you. Working with an investor is critical in this market because there is so much noise. So being able to sift through it with someone like ourselves, where we can listen to your requirements, plan the day one all the way to exit is important. It's a relationship journey that we've gone on many times.
And fundamentally, we are advisors, right? And that's using data to have that objective view of what is the best fit for your investment strategy. And it's thinking about your risk appetite. It's thinking about your investment goals. Is it going to be a short-term rental play? Is it a long-term rental play? If it's to flip, when is the right time to flip based on your execution and based on what's available in the market and where the market is progressing to next? And we have various data tools, AI tools that can filter down this search for you to make sure you're going into this informed, prepared, and reassured that you're making the right decision. And on top of that, we only work with select developers that we have done our homework on. We partner with the best because we believe in the best and their track records behind this. This isn't to say we ignore new and upcoming developers that are entering the market, but it's important that we, from our side, do our due diligence to ensure that we can execute your investment strategy. Because at Aspas, we are one of the biggest agencies in the secondary market. We are one of the biggest rental teams in Dubai. And that's to ensure that investors like yourselves can execute that strategy. So when you get the keys to your property, we will be there at the snagging appointment. We will be there with our rental teams. We will be there with our secondary market teams to ensure we can execute. And fundamentally, we will be there to say, hey, don't actually sell this asset right now because the growth that we're seeing in this community, the end user demand we're seeing in this community, it's better to wait another year. It's better to allow the market to progress. Or maybe there's an opportunity to exit sooner because we have a hot buyer who missed out on the launch. This is the benefit of working with a SPAS and alongside the developers that we partner with to ensure that you can also secure your units on these very, very competitive launches. Jordan, for example, last year at a major launch was ninth in the queue of a project that had 10 billion of sales in one day. How is that? It's because we have such strong partnerships with these developers because we've helped to enhance their brand by our secondary market presence. So,
in summary, at Aspas, we can give you priority access, we can give you data-led insights, and we'll be there every step of the journey with you. This market is very difficult to navigate. Yes, it's a booming real estate market, but there are tons of developers and tons of agents in the market. We will be the trusted partner from day one, all the way until exit, and hopefully the expansion of your portfolio.
if you like what you've heard from this presentation, do get in touch today to schedule a one-on-one consultation to understand your investment strategy and your requirements, or to explore one of our partner developer galleries and understand what the market has to offer for you. Look forward to speaking to you soon.